Hello and welcome to another update video on XOM, ExxonMobil. I don't think I've ever covered it here in public, maybe once or twice a long time ago. It is interesting because this week on Friday we have earnings and revenues coming up. So XOM financials are going to be important. We're going to take a look at them in this video as well. I want to start with the Elliott wave structure, because we had a nice setup in recent weeks. It is one of the stocks that we analyze in the stocks membership. So in our stocks community, I analyze 20 plus stocks plus the S&P 500, ES futures chart, NASDAQ, gold, silver, platinum, palladium, and any, a lot of bonus indices and so on. Feel free to check it out. I'll leave a link for you guys in the comment section. But yeah, that's basically why I cover XOM today, because it's one of the regulars there, the regular guests in the MCO community. And I've been bullish on XOM for quite some time. It has been grinding higher, but slowly and steadily. So it's growing. It's going higher, but in a very, very choppy and messy structure. I don't think that we have a top yet, and I can also see the potential for some upside extensions. At the moment, the price has obviously, we have seen a reaction here to this support zone, which is between $107.44 and $111.49 after the price formed the B wave low in April. This is not an impulse. It looks like a diagonal pattern. We have a 1-2 setup. This is an AB structure. This might be the wave C of wave 3. The wave 3 then is quite short. This was the wave 4. I mean, it worked, and now we could be in the wave 5. I can see the potential for some further extensions, but we take it level by level. What was quite important, what was this break above this trend line? I mean, this trend line has been with us since 2024. Okay, we have several touch points. Now we've broken above it, as it seems. Bulls and the bears have been fighting to finally break above this trend line. Now, are we gonna go up in a straight line to $126, $130? Probably not, right? My view is, first of all, let's see. I mean, this was the support area. Typically in these support areas, risk is low, reward is high. I can't tell you to buy in these areas. I can't give you financial advice. However, typically, these are the zones where reversals should happen. These are also the zones where a lot of Elliott wave traders would look for reversals and would get positioned. But in the end, it always depends on your own trading strategy. But yeah, there has been a reaction. And what I'd like to see next is a 5-wave move up. Now, you see we have 3 waves up from that low. That, from an Elliott wave point of view, doesn't give us confirmation. But if we get one more high, we have 5 waves up. That would be interesting, because with a 5-wave move up, we probably have completed then our A wave of the 5th wave. I mean, it could turn into something more complex, but that's what my view is at the moment. 5 waves up. Then I will add support for wave B. So there will be another support area. There might be another setup. I can definitely see that happen if we get a 5-wave move up, then a B wave pullback in wave, a 3-wave pullback in wave B could be an opportunity, and then the C wave up could follow from there towards $126 plus. XOM, however, is not only interesting because of the Elliott wave structure, but also because of possible dividends, that are typically paid. So it's one of the more reliable dividend payers. So yeah, there are quite a few interesting aspects. So that means I'm bullish about XOM. For now, I would leave this support area on the chart, because it could very well be that we dip back into it in case we extend the wave 4. I would expect some volatility this week. Again, earnings are coming up. Earnings are coming up. Now, let's take a look at some financials and some financial metrics for XOM, ExxonMobil. We'll take a look at the financials here on the XTB page. This is the X Station. We work together. We cooperate with XTB. It's an internationally, worldwide regulated broker. At the moment, they have a promotion running where you might be able to qualify for a free stock. It depends a little bit on where you are located. They have different promotions in different countries. In the UK, for example, you can get a free Rolls-Royce share. I know we have a lot of viewers from the UK. In Germany, you can get a Mercedes-Benz share. So feel free to check it out. There's a link in the comment section. If you want to support the channel, you can use it. And also maybe you are looking for a broker yourself at the moment. It's commission-free trading all the way up to 100,000 euros trading volume per month. And yeah, a lot of benefits. Stocks, ETFs, you can trade over 8,400 securities from the EU and the USA. And yeah, you can even trade Forex, commodities, indices. Check it out if you're interested. Let's take a look at the XOM financials. First of all, we can see here, on the dashboard, if we go to info, we can see the dividend payments, and they pay every 3 months, which is quite common for US stocks. So the forecast, there's no forecast here at the moment, but they should probably pay again in December, right? They should pay again in December. Hold on, I just need to double check because I need to plug in my laptop. Hold on, give me a second before it runs out of battery. So yeah, should get back shortly. Yeah, there you go. So it should get one more payment. I'd say probably $1 again per share. This has been quite stable. If we look at the history here, you can see that it's been going up a little bit over the years, step by step in line with the stock price. But overall, it has been quite stable. If we then take a look at the financials, you can see that we have a dividend rate of around 3.4%, which is quite good. It's not a pure dividend title, but 3.4 is quite healthy. Now, I mean, what are they even doing? You know, what is ExxonMobil even doing? Well, they are one of the largest energy companies in the world. They operate across the entire oil and gas value chain, from exploration and production to refining and petrochemicals. So they have a growing exposure as well to liquefied natural gas, LNG it's called, and they are gradually investing in carbon capture and renewable fuels as part of their long-term energy transition strategy. I mean, in simple terms, it's a global energy powerhouse, really. A company that literally sits at the heart of global commodity flows. You know, when I selected the stocks for our stocks community, like the basic ones, I mean, at higher tiers, there are, hundreds of stocks we cover, but for the basic ones that we cover on a very regular basis, I try to find stocks that are really stable, interesting from a chart point of view, where we can read the structures well, and some that are worldwide, recognized market leaders, for example. Now, let's look at some of the key financial metrics and explain what they actually mean. I think that's very important, especially because the earnings are coming up. So first of all, we've got earnings per share, $7.04. This is obviously the profit per share the company generates. So for Exxon, that's quite a solid number, considering oil prices are usually quite volatile, and they also have been quite stable. Just sideways really now for a few years, the oil prices. It's quite a solid number. It shows that even in kind of a sideways range environment where there isn't really a clear direction, but still volatility, the company is comfortably profitable. We've got price to earnings 16.4. It's a moderate valuation. For a cyclical business like energy, a PE around 16 means the market expects earning stability, in my experience. So not aggressive growth, but no collapse either. So historically, Exxon, by the way, trades between 12 and 18 times earnings. So right now, it's, you could say, fairly valued. I think there's a tendency for it to get overvalued if the oil prices go up a bit. Return on equity, ROE, 11.7%. So ROE shows how efficiently the company uses shareholders' equity to generate profit. And anything above 10% for a capital-intensive industry like oil and gas is, in my view, a sign of good capital discipline. Then we've got return on invested capital, ROIC. It's at 10.3%. It's another measure of profitability and efficiency. And 10% means its core assets are generating solid returns, especially impressive given the heavy infrastructure costs typical of the energy sector. Now, dividend yield, we talked about it, 3.4%. They are known as one of the most reliable dividend payers in the market. They've increased or even maintained, increased a little bit, maintained and increased, obviously, the dividend for decades, but by that they have maintained their dividend yield. And 3 to 3.5% is healthy, and especially because it's backed by cash flows. Operating margin, 11.4%. That means Exxon keeps roughly 11 cents of profit for every dollar in revenue, and that's actually strong for an energy company. Especially if you consider that, refining margins can swing dramatically with oil prices. And then we've got EV to EBITDA at 7.3. That's the valuation multiple comparing enterprise value to operating profit. And below 10 is generally considered reasonable, so Exxon is not expensive on a cash flow basis. Now, overall, ExxonMobil's fundamentals are solid and conservative. So you're looking at a company here with low debt, consistent cash generation, strong profitability, and a shareholder-friendly dividend policy. Exxon is managed more like an industrial conglomerate, you could say, than a speculative energy play. There are other, maybe more interesting, more volatile energy plays out there, right? But this one is like a stable cash flow play, right? A dividend payer as well. Remember that oil prices, with a stock like this, oil prices are the key variable here. And when prices rise, earnings and ROE can double. When prices fall, those metrics compress. But Exxon stays profitable because of diversification and scale. So their integrated business model, as I said, upstream, downstream, and chemicals, kind of acts as a hedge across the different cycles. So that's kind of why you see moderate but very stable profitability metrics. So they reflect a mature, well-hedged energy company rather than a high beta, highly volatile stock. Beta here is 0.47, so it's not very volatile, That's for those who want a bit of stability maybe in their portfolio. So this stock is not about explosive growth, it's more about consistency. But as far as I look at many balance sheets as well and financials, and they have one of the cleanest balance sheets in the energy sector. Strong capital returns, sustainable dividend yield, fair value. So it's not exciting, but reliable it is. And in the energy world, reliability is quite often what a lot of people are looking for. So hopefully that gives you a bit of an idea. It seems like the structure that we've been looking at is carried by fundamentals. And I'll obviously, keep you updated, but it's not one that is covered very often here on YouTube. I just shared with you the wave count because earnings are coming up this week. I thought it might be interesting. Also, if you, as I said, if you want to trade ExxonMobil potentially, you can do that on XTB's X-Station. So feel free to check it out. The link is in the comments section. And I wish you a great day. Thanks so much. Bye-bye.